Hey everybody, it's Cindy Bishop with Cindy Bishop Worldwide, and today we have Gary Garrison. So it's afternoon. Good afternoon, and welcome to today's 7 financial strategies for real estate agents class. And I'm very pleased to introduce Gary Garrison as our instructor. And of course, many of you know Gary, he does many of our continuing ed classes because he is the broker with the mostest. But for those of you that don't already know Gary, he's really a man of many, many talents. He was a senior level IT consultant for over 20 years. And before becoming a full-time realtor, and by the way, he is my IT guy, and he's the best I ever used. I just had to sneak that in.
Thank you.
And he has been the full-time realtor for over 12 years now, and of course a broker. But he's also a wealth manager, helping individuals and businesses prepare really for more financially secure futures. For him, he has always been driven to learn to better himself, and he has always been grateful for the opportunity to help others with what he has learned. So with the right help, and a lot of agents that have gone to him have said this is true, so I know it is, a secure and strong financial future is possible. And today he's going to be sharing these important concepts that you guys can use to achieve that goal. So without further ado, here comes Gary.
Thank you, Cindy, and welcome everybody to today's the 7 strategies for real estate agents. I really appreciate you guys being here. As Cindy mentioned, I do quite a few things. I certainly have over my career. Started out in IT, did that for about 20 years, a little over before moving into real estate. And there were a number of reasons that went into that, but the opportunities look better in the real estate market. And then up a couple of years ago, I was presented an opportunity really to take a look at adding wealth management as another possible service for my clients. But initially, I start with all of these as a benefit for myself and my family first. So as you can see, specialize in asset protection and growth, take a holistic approach. And I've been fortunate to be able to help other folks for over 30 years now, being able to do, tackle a number of their things. And I joked on the screen, about their biggest problems: computer, a house, and money. And I know computer isn't necessarily the biggest problem, but we all know how we feel when our computer stops working or the network is not doing what it's supposed to do. But I certainly have been grateful to be able to help folks over the last 30 years. And money is something that is near and dear to my heart, as I'm sure it is near and dear to yours, which is why I was glad to have been presented the opportunity to really sort of explore this and take it to the next level. So just real quick, what is it that I do? I help people leap, and that's just a program that I put together just to be silly, but it's meaningful. So not leap in front of a train, not leap off a bridge or leap into a river, help them leap into a pot of money, and put a little smiley face on the end there. But that's really my goal, is to help make sure that those folks that I work with, that they are more financially secure, and able to take advantage of opportunities that right now they may not be able to take advantage of. And then how do I do that? At no cost to my clients, help them implement strategies using non-securities based solutions to create stronger financial futures. And that's important because, certainly the security side of it's going to be your stock market, your mutual funds, things like that. But in that particular area of financial management, there's a lot of risk. And at our age, especially with the average real estate agent being 55 years old, we're not as, I would say, inclined to accept risk as we were maybe 30 years ago. So everything that I look towards now and certainly work with is with an eye towards security, as far as financial security, things being safe, secure, risk-free, growth potential. And so that's what I do for my clients. And I'll talk about more about the LEAP program a little bit later. But let's take a look at really how I got started with this. So as you saw, I did technology and I've done real estate, and I get a lot of questions from folks. What is it that got you into doing the wealth management side of things? And so honestly, it started with a phone call from my father a couple of years ago. He retired after 44 years. He was with a company for 44 years, And most of those big companies, he was with Verizon, has got these blue chip companies kind of in their hip pocket, kind of riding their coattails. Anytime they know somebody's leaving or, the company, first thing they want to do is reach out and try to sign them up for their business. And he just didn't like what it was that they were telling him. As an example, they were saying, hey, you roll over $500,000 of your retirement money into one of our annuities products or one of our programs, and then we'll gladly provide supplemental income at $25,000 a year for the next 20 years. My father's not a rocket scientist by any stretch, but he can do simple math. And he's like, all right, well, that's $500,000 over 20 years. Did it not earn anything? What else do I get from it? So he wasn't really happy with what he was getting from them. And really by chance, a buddy of his had retired ahead of him and turned him on to this independent financial advisor. And after doing his due diligence, he really liked what he had to say and was willing to give him the chance instead really take and manage his retirement money. Because as you know, when you hit retirement, you're not looking at accumulating a lot more wealth for the rest of your life. You're really particular about what happens with that money. You really don't want it to go away. So what really prompted his phone call to me was at the 5-year mark, and he retired 2011. So this would have been what, 2000, or maybe a little bit later, 2017, 2012, 2013. So about 17, 18 is when he called me. He'd been at 5 years or so, and he's looking at his growth. And he's like, oh my goodness, it's gone up 35%. And during that time period, if you'll recall, since 2000, the stock market has been up and down, and unfortunately more down than up. So he was just astounded, and he called me up and he says, Gary, you know what? I really think you need to look into this, because not only could it help you and your family, but this may be something that you may be able to use to help your clients as well. And I'm all for helping my clients make more money, because then you can buy more real estate. So I'm thinking, hey, this is a great idea, but let me look into it. And one of the reasons that I looked into it is because, prevalent in the news are these shocking stories at the number of people that are just unprepared for retirement. I mean, depending on the numbers you look at or what particular statistic that they're basing their numbers on, it's anywhere between 50 and 78% of Americans just aren't prepared for retirement. And the same numbers you're going to find are also have insufficient protection for their finances. So if something were to happen to them, then they don't have the protection in place to make sure that they're able to continue to pay their bills and live. And then more shocking than that, as I really went down this path, I said, you know what, this makes the most sense. Let me go ahead and pursue this further. Was finding out through the whole licensing process and my research that the traditional advice that we're given is outdated. Not to mention it's way too risky. And on a personal note, that really resonated, because as someone that had been in the technology sector for 20 plus years before moving into real estate, I had the opportunity of contributing to my 401k with company matches. I would take the opportunity to dabble on my own. And at the end of 20 years, when I decided to get out of the technology industry, I was shocked even more at how little money I actually had, because of that high risk, high reward in your traditional investing strategy. So it kind of dawned on me as I'm going through the information that there was so much more that it would have benefited me to know 20, 30 years ago that I'm grateful to know now. And it explained a lot. A big one, of course, that the 401k was never meant to be used as it's being used today. It was really a compromise between the federal government and the wealthy, of course, wanting to pay even less taxes, and the government saying no. But in some genius move, somebody decided, hey, that's going to be the primary investment vehicle. Let's get rid of pensions because they were too costly for us as a business. And so that's why I think a big part as to why 78% of Americans are unprepared. They've been relying on a system that is outdated and too risky, but has been told that's the traditional method. That's what everybody does. And hey, wouldn't it be great if you could get 15, 20, 25% gains? It's also shocking to find out as I was going through this that there are solutions out there that exist that just either aren't being shared on a large enough level, or are being shared but kind of shut down because of some sort of predisposed belief about it. So for me, it's important that, that not only do I somehow get to my point of financial security, but I believe everybody should have that responsibility or that ability to be able to achieve financial security. And I just feel like the odds are stacked against us, where most of us are taking the advice of the 97%, and therefore we'll almost never be able to get out of the where we are, whereas the 3%ers aren't doing anything that we're doing. And that's why they're in the 3% category. And that's where I think we should all be. And the reason I put this together in particular is because I really feel that real estate agents, as I mentioned, the average agents, excuse me, 55 plus is 55 years old, that if those of us are behind on our retirement goals, and if there are opportunities we want to take advantage of, maybe investment opportunities, maybe we want to get into flipping properties and things like that, we're just not in a position to be able to do that. I think the real estate industry itself is uniquely positioned to be able to do that simply because of the commission-based aspect of our business. And so I think we can make up for lost time because we have the ability to accumulate much more money than your traditional 9-to-5er who's tied to a salary. And I think because of that, it would be tremendous to get that information out and help folks get past some of their worries and fears moving forward. The hard truth, though, is that retirement planning, putting money together for even just living day to day today is very, very complicated. And so, again, I was very grateful for my opportunities to be able to get into the industry and align myself with some incredible folks. I have teams both here on the East Coast and the West Coast that I work with on a regular basis to make sure that no stone is left unturned and no opportunity is missed for folks. Make sure that they get the best advice that they can. So with that, I understand the importance of our time. I know most of us, my fellow real estate agents, are ADHD. So what I decided to do is kind of put together a quick kind of a class that really just provides some good topics or strategies, food for thought going forward, things that you may not have thought of or didn't even know existed, that I think as real estate agents and virtually anybody else, but in particular real estate agents, I think that you can take advantage of these if you're not already, or certainly look into them and see if they can help you and your family and your business certainly be more profitable and feel better about yourselves going forward. Keep in mind, though, that the topics I'm going to cover are going to be general in nature. Everybody's needs and abilities are unique to them. And so, anything more detailed or specific would have to be done through one-on-one consultation, which again is at no risk, no cost, no obligation, but it's just part of the process. And I'll go over that a little bit later for you. So what I'll cover: strategies to protect, grow, and enjoy your money. That's the goal, not to grow it and yet still feel like you've got to live below your current means, your current standard of living. To start with, we'll look at shielding yourself from the unexpected. We'll talk about debt elimination, which is not a new concept by any stretch, but there is a product or service out there that you may not be familiar with that honestly I think would benefit you and possibly your children if they have student debt and things like that that they need to overcome. Protection from loss of income. We'll talk about how to maximize commissions to speed up wealth creation. That's what I was alluding to just a minute ago. Strategies for removing investment risks, protecting your money from future taxes, and obtaining lifetime income. That's, for most folks, that's the biggest worry. And really the end game is to make sure that no matter what happens, we have enough to be able to last our lifetime. And as a bonus, I'll talk about a plan that's out there that exists that could be great for recruiting and retaining top talent. So without further ado, we're going to go ahead and jump into the first item. So shielding yourself from the unexpected. And this starts with creating a living trust. And I'm sure trusts are not new to you either. especially in the real estate industry. We come across folks that have things in trust all the time, but we don't necessarily think about them for ourselves. And what we do here is quite often that they're complicated or expensive. And they certainly can be, but they don't have to be. They do, however, provide an awful lot of benefit, especially if you think back to 2020 and the sad numbers of thousands of individuals that perished from COVID and are still perishing today. And it was completely unexpected, out of the blue. Next thing you know, we're losing hundreds of thousands of individuals. And I guarantee you that a pretty hefty portion of them did not already have things in place to take care of and secure their family during that process. So if you want to start with a durable power of attorney over finance, if you'll recall, many of the folks that contracted COVID got to a point where some of them were even in a coma, but they lost the ability really to be able to interact or think. And yet somebody had to be able to make decisions on their financial well-being. Same for healthcare. Someone would have to make decisions on their healthcare, and these durable, excuse me, these durable power of attorneys are great just for that. You appoint somebody to be able to make those decisions for you in the event that you're unable to make them for yourself. The Advanced Healthcare Directive is actually a kind of a backup for your durable power of attorney over healthcare in the event that your appointed individual is unavailable or has changed their mind and they're just unwilling to make like end of life decisions for you. Your Advanced Healthcare Directive is where you would put that information. It's the guidance that you would provide folks on the type of care that you would be interested in the event that you're not able to communicate that yourself. Your last will and testament certainly is something that you should have. If you don't have something at a minimum, you should have a last will and testament. It's more of a guideline though. Your trust is a little bit more, is going to be more specific, and the trust will avoid the probate process, whereas your will not. And so just keep in mind, but if you have nothing at all, at least get a will in place. And if you do create a trust, which I highly recommend, what most folks forget to do is actually fund the trust. It's not a lot of money to fund it, but the reality is that if you're counting on life insurance to pay for your burial and other death expenses, unfortunately, that could take 30, 45, 60 plus days before the insurance company gets that money into your loved one's hands. And, you will have been, the funeral would have occurred probably weeks before that. So, funding the trust is really the best way to help ensure that not only is everything taken care of the way that you want, by having the trust, everything is taken care of the way that you would want it to be, but funding the trust also helps ensure that your family doesn't have to carry that burden of burial services, funeral services and things like that out of pocket before the insurance makes the payment. So if you do have any questions, if that's something that could be of interest to you, you can follow this link here. This will take you to my webpage on this. There's a product, Estate Docs Pro, which is an online 24/7 document service where you can actually create these documents for you. You have access to them 24/7, and it's going to be a lot less expensive than going through an estate attorney to do them. And they're all created for the specific state that you need. And if you take a look at it, it's of interest, let me know, and I can certainly send you a link that will allow you to get a free trial period as well. But for shielding yourself from the unexpected, I highly recommend creating a trust, especially in light of what we've seen just this last 17 months about eliminating debt. Again, so this is the second item. So this isn't an unusual or unheard of item for folks to take care of. Unfortunately, many follow the traditional approach. So if you got student loans, credit cards, car payments, your traditional approach is, you pay it off, you sacrifice everything you can today in order to pay it off sooner, if at all possible. At the end of the day, sure, you paid off the debt following the traditional method, but what have you sacrificed in the process? What have you gained outside of your debt now being down to zero, or that particular debt item being at zero? And you've lost the valuable time that could have been accumulating money at the same time. So, did you know that there's actually a program out there that will allow you that same dollar to do double duty? So most folks, when you think of, how does your dollar perform for you? Most will take a look at, well, I either can spend it or I can save it. And traditionally, that's absolutely the case. But there's a program that actually allows that same dollar to do both. And it's great for being able to help you not only pay off your debts earlier, but at the same time, that money is accumulating compound interest. So, say an individual in the program, normally would pay off their debt 9 years if they were to pay it off, and it was going to be $35,000 or so in costs. But by using the program, their costs are reduced to $15,000. In the process, they pay it off in 3 years, 3 to 5 years. Again, it depends on the program. But if they were to still make those same payments for that same 9-year schedule, they could have $100,000+ in savings, which is much better than having zero in savings and yet zero debt. They still have the same zero debt, but now they'll have savings as well. So it's a great program out there. Very few people that I've spoken to have even heard of it, which is why I wanted to bring it up. If any interest at all, any questions, please reach out, let me know. Protect from loss of income in the real estate industry. Luckily, many are dual income households, but not everybody is. And even if you are dual income, it's not like you could lose one source of income and not have it be problematic for your family or your business. So things to keep in mind is what happens if you're to get hurt, fall sick, not able to do work. What happens in unexpected death. Tragic if you are a team owner, business owner. What happens if your key producer or producers leave, and all of a sudden your business isn't generating the income that it needs to generate in order to continue to survive, or at least to thrive, if not at least survive. And what happens in the real estate, if the real estate industry changes, market wise, and this craziness that we're seeing today of above asking price purchases, waiving all contingencies goes away, and the next thing you know, we've got homes sitting on the market again, like it has at least in the past. 3 months, 6 months, prices get reduced. What happens if that were to affect you? So there are programs out there and products out there that will allow you to accumulate money without the market risk. As I mentioned before, my focus is on the non-securities side of wealth management. If needed, you can access some of that accumulated value through tax-free loans, depending on the product. Oftentimes too, you can take a look at adding what they refer to as riders, if they don't already come with them, that include long-term care, home care, if you want to be taken care of out of your home, terminal illness protection, etc. So again, these are to address some of those other issues up there, injury or illness. And then business protection. There are programs out there, products out there that will allow you to protect your business in the event that a key earner does leave the business and it weighs heavily financially. Or what happens if a partner dies unexpectedly. You can protect the business financially as well as professionally in that situation. It's not always advisable that that the family takes over for that partner's side. So having a good solid plan in place can help make all of that a lot easier and much more comfortable for you and your business, and help ensure that you and the business continue to thrive. Okay, so I talked about the speed up wealth creation. And so this is where I really feel that in our industry, if you are behind or feel you are behind in your creation of wealth, your retirement savings, this is where you can make it up. So I found in part of my research and studies and trying to figure out how to help, those of us in the real estate industry, that there's a program out there for essentially for high income earners. So there is a minimum household requirement. In this case, it's $150,000 of annual income that is required. And those requirements do change from time to time. But as I mentioned, this is for speeding up wealth creation. So you're looking at what would normally take you 30 years to do, you're going to try to do in 15. So as I mentioned here, it's a 5-5-5 plan. The first 5 years, your contribution, so your payment into the plan is going to be matched because this is a leverage plan. The second 5 years, you're not making any contributions, that they're all being provided by, in this case, the bank is providing because this is leveraged. And then the last 5 years is strictly growth. So it is a 15-year plan. So it's not a tomorrow I'm going to be a millionaire plan, but this is for speeding up your wealth creation. So trying to make up for lost time. At the end of that 15 years, after paying back your expenses, traditionally the program yields 60 to 100% more money in that same 15-year period than you would have been able to accumulate on your own. And it's been through all of the 100+ disaster scenarios in order to get approval, which is why there are a couple of banks out there, a couple of programs that are willing to support it because it's been through an exhaustive study to make sure that the plan works. Those of us in the real estate industry, the easiest way to think of it is it's similar to a mortgage concept for your retirement. When a buyer purchases a home, it can do 0% down, 3% down, 20% down, as an option when they're financing it. They're using leverage. So whatever money they're putting down is going to be significantly less than what the bank is going to be contributing to the purchase. So whether your buyer sees that money change hands or not, doesn't really matter. That money does change hands. They just happen to be capitalizing on leverage. And so this 5-5-5 plan actually is just that. You're going to use leverage with the bank. The banks are offering incredibly low interest rates for it. At the end of the 15-year period, they get paid back and you walk away with 60 to 100% more than you would have been able to generate on your own. So great program. And I think this is something where those of us in the real estate industry certainly can utilize to make up for lost time. And a lot of these programs, you can have these multiples. So it can be attached to multiple individuals, yourself, spouse, children, grandchildren, depending on what your end goal is. There's certainly some tremendous opportunities, again, to maximize your commissions and really help speed up your wealth creation. Whether you're making up for lost time or whether you're anxious to retire quickly, these are great programs for folks that can qualify. Remove investment risk. So this should be a no-brainer, for us. We recognize that there are risks involved. The longer you hold on to something, though, the greater the risk is that whatever gains that you've realized could be lost. And the older we get, the more we treasure or value the gains that we've earned and recognize that if we're going to be retired, we really don't want to lose anything because we're not earning to make up for those losses. So first step is to move away from the traditional investment vehicles. Those are your qualified vehicles, your 401k. Your qualified simply means that money is qualified to be taxed. So those are your tax deferred programs that we've been told is what everybody uses to, for their retirement money. And unfortunately, everyone really is only the 97% of us that are fighting to get ahead in life. The 3%ers, that's not the system that they rely on. So I would move away from the traditional investment vehicles, utilize the non-securities products to grow risk-free. They're great because they don't actually invest the money directly into the stock market. They can attach to an index. So if the stock market were to crash, like it has several times already since 2000, so our prime earning years, we've already had a lousy stock market as far as the ups and downs go. If it drops 50%, it's got to come up 100% just for us to break even. So luckily, with these non-securities products out there, if the stock market crashes, we just don't gain anything. But the moment the stock market goes back up, we immediately start realizing the gains. So risk-free growth, compound interest, and the benefit of them is that the gains aren't taxed annually like they are in the traditional investment vehicle area. So every year you get a tax form that says, here's how much I earned, and you have to pay taxes on it. You don't with these non-securities products because they're in a special category. And because of that, IRS places restrictions on them. But if you know how to use them and use them properly, you'll be able to also grow that money a lot quicker as well by taking full advantage of the tax-free compound growth that you'll see there, number 3. So look to remove your investment risks. It may take sitting down with an advisor to evaluate where it is that your money is currently located, and look at some of the different strategies for both current investments as well as what you're going to look to do for new investments. All right, protect money from future taxes. Will your retirement dollars be able to overcome tax increases? I think everybody now fully expects taxes to go up. Historically, taxes are lower than they have, near the lowest they have been in the history of the United States. So there's a lot more room that can go up, but with all of the money that the government had to make available to keep the country afloat during COVID, the shuttering of all the businesses and the unexpected layoffs and everything else, they're going to have to recover that money somehow. The problem is if we're at or near retirement, any increases are going to greatly diminish what we can continue to accumulate, certainly through the traditional methods, and actually reduces a great deal of the retirement savings we already have. So if a dollar no longer buys a dollar, it only buys, a dollar is worth 75 cents, then I'm going to blow through my retirement money a lot quicker. It's just not going to go anywhere near as far. And so those two questions, is it going to be, will the growth be taxed every year like they are in your traditional investments? And then can they survive tax increases? So again, look to move your money out of qualified plans. Future taxes and even current taxes, a very complicated subject. You want to leverage a combination of traditional and non-traditional vehicles as best you can, because you want to be smart about it. You don't want to just pull money out completely and then subject yourself to much higher than normal taxes. So it needs to be a planned approach, but you can balance it and use the traditional vehicles, utilize Roth, although Roth, again, it's a great program. You'll know that because the IRS has put restrictions on it, but it also too has its limitations. So you can utilize Roth IRA and cash value life insurance as examples for being able to protect yourself from future taxation and also help speed up the growth. Something to think about is that when you do start receiving Social Security, and I'll have a class, and I believe the class is scheduled in August specifically on the topic of Social Security, that Social Security is actually taxable. Most of us can't live on Social Security, and the calculations are based on what they refer to as provisional income. So what you want to do is make sure your money is invested in a way that the money you do receive does not count against provisional income, because once your provisional income exceeds a certain amount, then up to 85% of your Social Security benefit is taxable. And to make matters worse, 50% of your Social Security benefit is considered provisional income. So it's like damned if you do, damned if you don't. So really a strong plan strategy can help, again, maximize the amount of money that you have to spend and help improve your chances of being able to weather the tax storms that we certainly see in front of us. Obtaining lifetime income, I would say what I hear most often, the biggest concern of folks is not having enough money to live on for the rest of their days. If you think about it, your average person stops working between 65 and 70. Some can work longer, some will stop working sooner, but if the average age of a real estate agent is 55, that's not too far down the road. If you're looking at that 65 to 70, and most can't survive on Social Security alone. Make matters worse, if they don't raise taxes, certainly in the relatively near future, there's an expectation that Social Security will no longer exist in 15 to 30 years. So, there's a real scary point where, it's possible that we just won't have the funds available. If you look at traditional strategies for saving to maintain your lifestyle, depending on what you look at, typically they're going to recommend 25 times your estimated annual income in a vehicle that is growing at at least 3 to 5% per year as kind of the safe strategy for ensuring that you've got enough income to survive how long, to last a lifetime and to not diminish too greatly your lifestyle. The problem with that approach is that most people do still worry, and the uncertainties make it even worse. So rather than maintaining the same lifestyle, they start to restrict and they start to sacrifice. They don't travel, they don't purchase things, they become much less of who they are and want it to be. And that should not really be your objective or your goal. You can actually, there are actually products out there that can actually solve this problem. Specifically, there are cash value life insurance products and annuities that include lifetime income riders, that even if the cash value diminishes to zero, that they will still pay the same amount as long as you're alive. And if you are to pass before it reaches zero, then you're, again, it would depend on the combination, but either your spouse could continue receiving the payments or could receive a death benefit. So they're multifaceted, way of making sure that you quite easily can be comforted knowing that you have the income to be able to last your lifetime. And then as the bonus I mentioned, for recruiting and retaining top talent, if you think about it, especially in our industry, top talent has lots of options, right? So they tend to get the best commission splits. A good recruiter is going to make sure that there are bonus opportunities available. They could receive a team car, free office space. I mean, there's all kinds of incentives out there. They could receive services for free, like an assistant or a marketer, transaction coordinator that's all dedicated to them or part of a shared resource. And for employees of a team, they could even receive as a benefit a qualified retirement plan. And so there are a couple of step and simple options that are available for those. If everybody's offering them, then how do you set yourself apart from the rest of the industry? Well, you can do that by taking advantage of that same program, but for businesses that I mentioned earlier that I feel we're uniquely positioned to be able to take advantage of, and that's that 555 plan. Considering that as a team lead or as a business owner, it's a 15-year commitment, but you're only committing 5 years of cash towards that benefit. I mean, wouldn't they be much happier and more likely to stay with you if they knew that you were helping take care of them and their family financially, with a program that at the end of 15 years is going to get them 60 and 100% more than they could look to get themselves, and in the end would cost you less overall than some of the other traditional plans for them. So there's a business version specific for that could be a great tool for recruiting and retaining top talent. So fantastic option out there, especially in today's competitive world where everybody is looking for the next and greatest and best, and folks are looking to accumulate those people are, as best they can, that can help ensure success as well. So as I mentioned, really the intent here was not to take up your whole afternoon. I wanted to introduce some topics and strategies to you. A lot of it's based on my own personal experience and the fellow agents that I speak with regarding their money worries and their business concerns, hoping to shed some light, maybe even get some of those mental juices running for you. Again, the focus is to protect, grow, and to be able to enjoy your money, knowing that you'll have the money to last a lifetime. And if something were to happen to you, money would still be available for your heirs or your spouse if need to. So with that, we talked about shielding from the unexpected by creating a living trust. And there's a great product online. I shared the link earlier. You can check it out. It's a 24/7 online system that can help you solve that and make sure you have the key documents in place. And it's an online secured system. So you've got accessible from your phone, tablet, desktops, no matter where you are in the world, you'd have access to it. Don't have to worry about a hard copy or calling an estate planner or attorney for that information for you. Eliminating debt. Everybody looks to eliminate debt. I know that's not a new topic, but there are some products and services that most people don't know about that will not only enable you to eliminate your debt quicker, but during the same time period, you'll actually be able to amass the savings and accumulate cash value. Protect from loss of income for both yourself and your business. Some great options out there. Many of us forget to think about it. We believe nothing is going to happen to us. I think 2020 taught us differently, that we're still just human, and something as silly as a virus could be enough to really derail things. And what were to happen to our loved ones, to those counting on us, if something were to happen, and what were to happen to our business if just competition or something were to happen to a key earner for us, whether they left the company or something happened to them and they're unable to produce. We talked about maximizing commissions to speed up wealth creation. Great program out there that I think for those of us that are worried that we don't have enough, know that this is a program that could work for you to help make up for lost time. We also just talked about a couple strategies for removing investment risks. That's going to be a key component of your overall plan to help ensure that you have funds available for opportunities now, as well as for your retirement later. We'll also discussed some options and strategies for protecting your money from future taxes, recognizing that taxes will definitely go up. And even if they don't, the tax deferred plans right now are actually going to cost us more money in the long run, because they were never intended to be how they're being used today as really our primary retirement vehicle. And we talked about obtaining lifetime income. That's the biggest worry for folks is, am I going to have enough? To last my lifetime. And it's great to know that there are products out there that actually do provide lifetime income, and they've got doublers and things like that to not only help you, but help protect your spouse in the end, and also help with your tax management as well. And then we did finally talk about plan for recruiting and retaining top talent by taking advantage of that 555 option that I talked about earlier for maximizing wealth creation. It's a great plan for attracting the right people for your organization and keeping them, because they're going to know that you're doing everything that they would want to do too for themselves, but they don't have to. They'll feel that you really do care about them, and there's a tremendous upside for you as part of that as well. So how I help, I mentioned the LEAP program earlier, and so it's just a simple, silly little acronym, but I think it really helps hit home the point. As you know, earlier, I've done IT consulting. I was an IT consultant for over 20 years. I've been doing real estate for over 12 years now, and been doing wealth management now for 2 years, and going strong. And I've always tackled everything by first learning, doing a lot of research, asking a lot of questions, but then applying. And I've learned over the years, I can learn all that I want. And I've seen a lot of people ask me questions and they just don't do anything with it. Unfortunately, time is not on our side. the longer you take to implement some of these strategies, the longer you take, the more time that you'll lose debating the issue, mulling it over, things like that. It's more time that you have to try to make up for, and you may find yourself in a position where you just don't have the time or the means to do it, especially if something unexpected were to happen. So you've got to apply it. So I help folks not just learn what their options are and to better understand. Most people don't even understand their current status. So together we help analyze and really determine what the current status is, what the current abilities are, current investments are, identify short, medium, and long-term goals, things like that. And then, myself and my teams, we get together and we go over that. And we come up with some strategies, short, medium, and long-term strategies that we believe would be the best ones that would help you would accomplish those goals. And then the next step, because learning is only the first part, if you don't apply it, then you're going to be right where you are today. And I'm sure the purpose or your goal is to actually be making those steps to get out of that 97% percentile, get in that 3%, have that financial security, have the money to be able to take advantage of opportunities, and to know that you're going to be taken care of for the rest of your life. So I help folks apply what they've learned, implement the proper strategies, and then together we monitor progress and we make adjustments as needed. So in a nutshell, that's I think that's a large number of topics, and it's a lot of what I do. If you're ready to take the leap, again, change occurs only when you apply what you've learned. Here's my contact information. Please contact me to get started. Before we wrap up, if you guys have any questions at all, I know I covered a broad range of topics. Please feel free to ask. I'll follow up with a kind of a questionnaire after the class with folks, just to make sure if you have any questions that you don't ask during the class, you can ask then, and make sure I'm available to answer or help you address any of your concerns. So any questions? People still awake? Always love that.